Hello, 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 everyone. Thank you so much for tuning in for our Hotel Ownership Unplugged series. And today or tonight, we're going to talk about how to buy a hotel. So my good friend and I, Tommy Bayer, we're going to walk you through the passive side and the active side of hotel ownership. So don't worry, we're going to walk you through it. If you don't know, if you do know, hopefully you'll learn something new today. All right, so just an overview of what we're going to talk about tonight. We're going to give you an introduction. We're going to talk about our stories. Both Tom and I, we both started off in operations and we worked our way up through the corporate side and now on the transactional side of hotel ownership. We're going to talk about what makes a hotel successful, how to get ready for your ownership thesis or to create one, which is your ownership criteria, the different pathways to hotel ownership. And if you have any, questions and answers, or questions so we can give you some answers, we will make sure that we leave our contact information so you can connect with us. And if you stay tuned to the very end, we'll have a very special surprise for you. If you have any more questions. All right, let's go. So my name is Davon Reed. Some folks call me a hotel queen. Some folks call me the hotel diva because I love Beyonce. But yes, I've been in the industry for over 15 years. I started off as a front desk agent, navigating my way from the front desk to hotel ownership. So hotel operations, feasibility studies, development. Throughout my career, $1 billion in assets managed, co-author of How to Buy a Hotel book, currently $30 million assets under management. I've been featured in just about everything with the exception of Essence. So Forbes, Time, Afrotech, Atlanta Business Chronicle, Black Enterprise Lodging. I've received numerous awards. Georgia State University 40 under 40. So I'm a proud Panther. So any Panthers in the house. I am a member of the prestigious International Society of Hospitality Consultant, and I was actually one of their first winners, probably actually during COVID, for their emerging leaders. So I'm super excited to hold that title. It's a great organization and just a lot of support. And then as well as being recognized as a top 100 influential hospitality leaders. So just to let you know, you are in great hands when it comes to hotels, okay? And then I'm going to pass the mic to the human calculator, Mr. Tom Bayer. Well, you gotta let folks know who you are. Who you are. Where you
it's
from?
good to meet you guys tonight. Appreciate you taking time for us. I'm gonna get that tattooed on my arm now, the human calculator. Yeah, so I've also been in the industry for about 18 years. Davon and I have been good friends for, gosh, about at least 15 of those.
Yeah.
So I've also managed about $1 billion worth of assets. I've got 3 different books on hotels. Davon didn't mention some of those. We're co-authored on a few ebooks too. I haven't been in Forbes, definitely haven't been in Essence. I don't think I'm going to get an invite to that one, but that's all right.
I don't know. Sometimes, hey, I told you invited to the cookout. You never know, Tom. You never know.
You never know. So I also started out, working my way through operations. So literally was parking people's cars at a 5 Diamond resort in South Carolina. And then I've been a GM at a few hotels. I was a VP of operations. At my peak, I oversaw 15 different properties. And I've been featured. I've done about 18 different publications from Hotel Interactive, eHotelier, Hospitality Net. I've done a white paper. I went to the University of South Carolina, so I'm a Gamecock for all you Gamecocks out there. Did some coursework at Cornell. I've won a bunch of different awards from GM of the Year for the Georgia Hotel and Lodging Association. Won some awards with the AHLA and a ton of property awards. So needless to say, you're in good hands tonight between the two of us. Currently asset manage about 7 hotels and and just generally help people through the navigate the world of hotel ownership. So excited to kind of expand on that tonight.
Uh, Tommy, awesome. You, like you said, you are in great hands. So for those who don't know, a GM stands for general manager. So you basically at the top position in a hotel. And the Georgia Hotel Lodging Association is an organization or advocacy group for pretty much all the hotels in the state of Georgia. So for him to receive that award is just a very, very high honor. So yes, you're in great hands. All right. So these are my hotels, and Tommy's actually the asset manager of them. So he actually came in and turned these bad boys around. Okay. We have to do a case study on that soon. But so my first hotel that I acquired after leaving corporate was this Home 2 Suites in El Reno, Oklahoma. It's 85 rooms. We purchased that for 8.3 million. And then we, along with business partner Mike Ely and Nassau Investments, and then we have the 100 in the middle, 145 room Staybridge Suites in Indianapolis Fishers, Indiana, and then the Hampton Inn and Suites in Scottsburg, Indiana. So we purchased that together for about 17.8 million, roughly. Yeah, so these are the three hotels in my portfolio. And I, like as I'm about to mention, I started off as a front desk agent. So I didn't come from a lot of money. Definitely did not have millions of dollars in my bank account. I don't even know if I ever met a millionaire. Maybe I did, I just didn't know. But so I didn't know anything about it. So we're going to just talk about some myths that you will need to have money. Somebody in your ownership group needs to have money, but we'll talk about different strategies on how you can get there. So I mentioned it. I started off as a front desk agent working at the Hyatt Regency Atlanta downtown. I do not have a picture of me working at the front desk. I wish I would have taken a picture. I didn't think about it. You know, Tommy, like pictures aren't what they are now. And in the phone, if I did take a picture of it, it disappeared in the phone because back then it stayed on the SIM card for the folks who are around the same age. You get it. And then now that's me. So I'm a mompreneur. He's 3 in that picture, but he's 5 now. And so that is my story. Like I said, I went from working as a front desk agent while I was in college. After I graduated from college, I took a non-paid internship for a hotel consulting firm. And that's when I knew, I was like, okay, I wanted to get into the hotel ownership space. And so then after I went into, 3 months there, working there in the morning, working at the Hyatt at night, then I went there full time, moved to Boston and worked at a larger asset management firm. And during that time, I was a part of organizations like the Under 30 Gateway, and that's how I met Tommy. And that was my introduction to hotel ownership. And so just navigating that way and building relationships and understanding, the raising the capital and just building relationships with the brands and brokers and helping, finding deals, which led me to owning a hotel. All right. So there are actually over 59,000 hotels in the United States. That's a lot of hotels. So if you are trying to buy one, it can be overwhelming. So and throughout the presentation, we're going to give you tips and information on what you can do to help you navigate to make your search not as hard when it comes to finding a hotel or finding an investment. So again, we're gonna bust some myths. You personally have to have millions of dollars. You personally have to be a millionaire. You have to have prior hotel experience or ownership or hotel experience. And Tommy, you probably seen that working with hotel owners. Some of them started off as millionaires and some of them didn't, right? And so it's a combination of that. And so we're just gonna be talking about different strategies and what you can do to get there. So some of the organizations that you can join, I think it's first-time hotel owners, would be NABHOOD, which stands for the National Association of Black Hotel Owners, Operators, and Developers. They meet once a year in July. Their goal is to increase the percentage of Black hotel owners. The Asian American Hotel Owners Association, which is a good conference. It's probably one of the largest hotel ownership conferences. And even though it's primarily Indian, anybody can join it. Anybody can join any of these organizations. And there are a lot more organizations that Tommy and I are both a part of, and he's part of some, I'm part of some, and we go to different conferences. But I think these are good for first-time hotel owners. The Latino Hotel Owners Association, their goal is to increase the percentage of Latino hotel owners, and then you have the American Hotel Lodging Association, and they're actually one of the largest and oldest organization for the hotel industry, and they're more of an advocacy group. You meaning, lobbying for us on the Hill in DC. They have different state chapters. So the Georgia Hotel Lodging Association will be the state chapter of the American Hotel Lodging Association. So I think those will be a good start. There are a lot of other hotel conferences and organizations, but they may be a little bit too advanced. I think this will be good for the fundamentals, and they're not as expensive because the major hotel there are about 4 major hotel conferences a year for the ownership side, and they can be quite expensive, and they don't really break down the ABCs of hotel ownership. But I think these organizations do a great job of that. All right, so some of the benefits of hotel investing would be tax benefits, hotel discounts, job creation, diversification, tax benefits, meaning you're writing out the depreciation. Hotel, that my favorite is really the hotel discounts. I like the job creation because the hotel industry is one of the few industries where you can start off as a front desk agent and move all the way into, hotel ownership or general manager. Tommy mentioned he started off in valet, and he rose to become general manager, one of the youngest general managers. I remember it was like big news when he became general manager, because he was general manager before he turned 30. And he was at one point overseeing 15 hotels. So it's not job creation. I think it's really career creation. And then diversification and diversifying your investment portfolio. Tommy, you think there are any other benefits of hotel investing that I missed?
I mean, it makes for a pretty good story when you're talking to your buddies and just saying, hey, I own these style points, let's say.
You get the cool points.
But yeah, the diversification is helpful, right? Because you can maybe you own apartments, so you own some multifamily, or maybe you're an industrial or something. But the nice part about hotels, and we'll get into it a little bit, is that it's a hedge against inflation, meaning you can change rates on hotels. We change our rates a couple times a day sometimes. So if there's a lot of demand in a market, you can increase your rates. Whereas if you own a apartment complex, you're only increasing your rates usually once a year or something like that, or whenever that lease renews. So so it's nice from that aspect as well.
Oh yeah, really good point. So let's talk about what makes a hotel successful. So it's 3 ingredients, in my opinion, that makes a hotel successful: location, brand, and operator. So a lot of people forget that hotels is actually a type of real estate. And so locations, nobody really travels just because of the hotel, unless it's like some type of like resort or something, because there's so many different things that you can do. But more than likely, people are traveling because of the location, and they just want to find a nice hotel because of that location, right? So it's not the hotel first and then a location. Is more than likely the location and then the hotel. So that's why it makes it so important, right? So nobody's like, ooh, I'm staying at this hotel at Disney World because I just got to stay at this hotel at Disney World. No, you want to go to Disney World, and then the hotel, you checking to see what brand and the experience, and it just so happened, and it's near Disney World, because the main reason why you're going is because of Disney World. That's what I mean by location. There are actually over 100 different brands. In your workbook, if you click on the link below to purchase your workbook, you'll get a list of all of the different brands, in the resources tab. But I just put this up here because a lot of them have diversity programs. So Choice has the emerging markets program, where you can You know, they focus on, you know, women and Black people and Native Americans and veterans and their emerging markets. And then so brands such as Quality Inn and Comfort Inn, and you know, those are good brands to start off with as a first time, you know, hotel owner. So you can understand the property, they're smaller, you know, maybe easier for you to get a loan. Then there's Hilton. Hilton is probably the #2 brand in the world. And they have a new program, a new diversity program, to increase the percentage of minorities owning hotels. Hilton, they have brands such as like Hampton Inn, Home2 Suites, you know, Homewood Suites. Tell me what other brands you could think of for Hilton that'd be good for first-time hotel owners.
Yeah, I mean, Hilton Garden Inn, but Spark is a new conversion brand
Smart,
that
yeah.
Hilton's doing. So Spark's
Yeah.
a good one. True is also good.
Yeah. Yeah. Those are good for first timers. And the reason why, because you want to build your portfolio. So you want to focus on hotels that they don't bring in a lot. They don't have a lot of expenses. So that means there's more money going down to your bottom line. So you're able to expand. Intercontinental Hotels Group. So they have Holiday Inn Express, you know, they have Candlewood, they have Staybridge, and then they actually have a minority program as well called Live to increase the percentage of minority hotel owners. Wyndham, they have brands such as Days Inn, Super 8, Microtel, La Quinta. Those type of hotels will be good for you to start off as a first-time hotel owner. They have a minority program to increase the percentage. So they have, you know, BOLD, which stands for Black-owned larger developers, and then, you know, women own the room. And then Best Western, that's more of a credit union. And then the other hotels are like banks. That's probably a good way to say it. It's more of a membership community. So those are the brands that I would look at. I think the brands that I mentioned and Tommy mentioned will be good starters to get you started from the price point, because you want to look at, you know, hotels if you can, $5 million or less. And the reason why I say that, because you could take advantage of the SBA, you know, 7A loan, which stands for Small Business Administration. And then typically when you buy a hotel, which Tommy will get in more on his side, talking about acquisitions, typically you need about 20 to 30% down. So that's why I say stay under the 5 million range, because if you're buying a hotel for 5 million, you're going to need about $1 million down. So starting off with smaller hotels and, you know, more economical hotels, because once you understand your first hotel and you keep up with your mortgage and you make it profitable, then it's easier for you to buy more. And then operator, you know, that is probably one of the most crucial thing that can make or break your hotel. You know, and a lot of people make mistakes with choosing the wrong operator, especially first time hotel owners. So we really, you know, want to make sure that you choose, and we both specialize in this, and finding the right operator. And what an operator is, they manage the day-to-day operations. Okay. So I'm sure everyone, you know, has stayed at a hotel and it had some type of horrible experience. And they're like, oh my gosh, you couldn't pay me to stay. That's an operator issue, right? Because you didn't have a pleasant stay, or you had the best stay ever in your life, and you're not going to go to that town unless you stay at that hotel because the experience was just absolutely amazing. That's an operator. So that's why it's so important, they, you know, to help you manage your finances for the hotel. They help with the rates that Tommy was talking about earlier, you know, with the fluctuating the rates. So that's something that the operator is in charge of, and you pay them a fee. Okay. All right. So we're going to talk about active versus passive. All right. So for those who don't know what an active investor is, an active investor would be someone like myself putting a deal together, raising capital, looking at the numbers. It don't make any sense. So I'm going to call in the Tommy, the human calculator, to come and fix it because these numbers not making sense to me, right? So that's an active investor. A passive investor is like, oh no, Davon, that's too much work. You know, I'm gonna let you figure that, you and Tommy figure that out, and why the numbers not working, that you need to hire a new general manager and the roof. That's too much. So what I'm gonna do is I'm just gonna passively invest, and then y'all handle that, and then I get my return. So that's really what the difference between the active versus passive. So active is what you would consider a general partner, and the passive is what you would consider a limited partner. So I'm going to talk about passive. And then later on the presentation, Tommy is going to talk about the active side, okay? So hopefully y'all still with me. Hopefully it's not boring, because we're going to make this fun for you, okay? All right, some steps. So let's set a vision, right? Set a vision. What do you want your hotel to look like? How you envision it? You know, set a budget, set a deadline, right? What's the date that you want to buy it? And that'll give you, that's how I operate. I give myself a date. I'm like, okay, this is the budget. This is how much I need. Let's go. All right. And that kind of just keeps me focused. And because if you just say, hey, I want to buy a hotel, it's like, okay, well, when do you want to do it? Or when do you want to invest? Right. And then determine your pathway. So I'm going to talk about some different pathways on how you can invest or buy a hotel. All right. So ways to invest, meaning you can use lines of credit, savings, retirement, life insurance, equity, crowdfunding. So, you know, self-directed IRAs when it comes to the retirement, cash value, your life insurance. We are not licensed financial advisors or financial advisors, period, or CPAs, certified public accountant. If you have a question or if you don't know, please reach out to them. You know, they know your financial situation, you know, better than us, right? So if you don't know, then definitely ask from a tax perspective, because they may be able to give you advice saying, okay, well, how about you do this, because that'll save you taxes, right? All right, because you definitely want your money to grow. So 4 ways, 4 is not like 4 or 5 pathways to hotel ownership. Okay, so there are 4 pathways to hotel ownership, 4 or 5 ways. So you have crowdfunding, where you can invest privately, and then you can invest through REITs, which stands for Real Estate Investment Trusts. And then you could do private investing, where you work directly with the owner. And then you have hotel syndication, or the active investor route. And the reason why I say it's 5, because you can invest in stocks. So, you know, Hyatt has stocks, Marriott has stocks, you know, Hilton have stocks, Choice, Wyndham. So if you like to play in the stock world, then you can invest in stock. You can invest in hotels that way. Now, you won't directly be an owner, because you're not investing in an asset, you're investing in the company. But if you do private investing, or if you go through the crowdfunding route, depending on how it's structured, you're investing directly into the asset, which will give you more benefits. All right. So remember earlier I was telling you, because I hope y'all been taking notes, right? I hope y'all got y'all pen and paper, and you like, oh my goodness, Devine and Tommy, y'all giving the tea. Like, so I really hope that y'all doing that. And so remember, I was talking about the 59,000 hotels. Well, in order to really search it and figure out, you need to create your investment criteria. So what kind of hotel, when do you plan to invest? Where do you plan to invest? Why are you investing? And how are you going to invest? So what kind of hotel? There are like over 20 different types of hotels: limited service, economy, select service, and extended stay at the hotels that I recommend for first-time hotel owners. There are over probably 20 resort, all suite. I can go on and on. As I mentioned, it is in your hand in the workbook. Just click on the link below to get your copy. So where do you plan to invest? Meaning, you want to do international, you want to do by your house, you want to do in the state. You know, why are you doing it? Because this will determine what kind of hotel you want to invest in. Are you doing it for cash flow? Are you doing it for equity? Are you doing it for generational wealth? Are you doing it for tax purposes? Because that'll help you determine when you're evaluating and analyzing your hotel. You know, and how are you going to do it, right? Are you going to work with partners? Are you going to, you know, pull money from your savings? Are you going to bring in investors? Like, how are you going to do it? So those are the questions you want to ask yourself. Okay, so REITs. There are about 18 different lodging REITs. You can go to REIT.com, public lodging REITs. You go to REIT.com to check them out. You can work with a brokerage firm or a financial advisor, or go to Morningstar or similar to Morningstar for research. So this is more of a passive way to invest, right? And you can go through a brokerage firm or financial advisor for stocks too. So questions to ask, you know, historical performance, you know, their portfolio, does it align with your investment thesis? Crowdfunding. Typically you have to be an accredited investor. Accredited investor is someone who has an income of $200,000 or more, a net worth of $1 million or more, excluding their primary residence. Some crowdfunding platforms: Commercial Real Estate Investor, CrowdStreet, Realty Mogul, And then, working with a financial advisor can help you select which deals on the site will work for you. So essentially crowdfunding is folks coming in together to invest through a website. Okay. So questions to ask, and there are more questions to ask. We have it in a notebook. So what's the return? Does the ownership group have experience? What's the minimum to invest? Right. So those are the questions that you kind of want to start asking yourself. Is it syndicated? Is there a certain type of paperwork? Okay. So Vestor.com, I'm the CEO and founder of it. And that was one of the reasons why I created it, for folks who want to invest passively or raise capital. So it's open to both accredited and non-accredited investors, and think of it as a marketplace for commercial real estate. You can just go to www.vestor.com. I have the barcode up handy for you if you want to scan it. All right. So what private investing, same thing with questions to ask, what's the return, what's the ownership group, and what's the minimum to invest? So it's passive, you're investing directly into the asset and you're working directly with the sponsor. So it's different from a REIT, because a REIT, you're investing in a REIT and the REIT owns the asset. Private investing and through crowdfunding, depending on how it's structured, you're investing directly into the asset, working with the sponsor. All right, now it's time for Mr. Tommy, and he is going to walk us through on how to analyze a deal, how to find a deal. All right, it's all you, buddy.
All right, so there's a bunch of different ways you can find a deal, right? One, you can go on to Crexi, CREXI.com. You can find deals through LoopNet. You can go through various hotel brokers. There's all kinds out there. CBRE is a broker. Hunter Hotels is a broker. Marcus and Millichap. There's a ton of different firms, and they're all kind of they all have different offices, usually around the country. So if you find a hotel in a certain area that you want to buy, you're going to want to look at and partner up with a broker in a certain market. They'll help you find a hotel there. So get on their mailing list. By the time you get on their mailing list, you're going to get more deals than you ever thought coming your way. At some point, you're going to maybe try and get off the mailing list because you get so many deals coming your way. But let's say you find a deal, right? Now the next question is, you find a hotel you like. The question is the deal going to work for you, right? So how do you figure that out, right? So what we're showing you here on the screen is a high-level deal analyzer that we came up with. Because look, you can do a pro forma. A detailed pro forma is going to take a lot of time, and you may not know how to do one, right? So the pro forma, just to refresh your memory or to educate you, is going to have all the historical information on the hotel. So revenues, occupancies, average daily rates, all of that, profit, net profit. And then you're going to predict out the future, and it's going to have it for maybe 3 years, 5 years, 10 years, however long. And then when you're working with a broker, sometimes they'll give you a pro forma that they've put together. But you don't want to buy a deal based on the broker's pro forma. You're going to want to run your own numbers and feel comfortable with it. So we put together this this deal analyzer, which should be available on the link below as well. And the deal analyzer is intended to allow you to analyze a deal quickly without going through a full-blown pro forma that's going to take you a couple hours. So in this case, when you get pretty comfortable with this format, you should be able to get it done in, call it 20 minutes or something. So let me walk you through it real fast, and I'll kind of explain some of the terminology just in case you're not familiar. So any of the cells in blue you're going to change, right? So you've got the property name, the number of keys or rooms, and then the year the hotel was built, right? Next thing you're going to fill in is the acquisition price. So how much are you paying for the hotel? In this case, we got 12.5 million. Next thing you're going to put is working capital. And what is working capital, you might ask? Working capital is just money that it's going to take to get the hotel started. Maybe you've got to put some money in the bank, right? An operating account. You got to put a little bit of money in there so the hotel can pay payroll and things like that. So you're gonna have to have some working capital for the hotel. Key money is the next line item here. You may or may not have key money, but key money is given to you from a brand when you're converting to a brand, or maybe you're developing a hotel. So if you go, from one brand to another, sometimes they'll give you key money. They call it key money because usually it's priced per key or per room. So it could be something like $5,000 per room or $2,000 per room. So, it would look like this. The formula would look like, let's say it's $2,000 per room. And it's negative because it's reducing the cost of the deal, right? Because the brand is giving it to you. The next is a PIP. So that's a property improvement plan, a renovation, if you will. So the brand's going to come in, they're going to say, that's great, Davon, you bought this Hilton, but it's going to cost $2 million. They're not going to tell you how much it costs, but you need to do these, 10 things or these 20 things or however long the list is. And you're going to have to come up with a number of what that cost you. In this case, we've just plugged in $2 million, which is about $16,000 per room. The next item is closing costs, right? So you're going to have a cost associated with getting a loan or ordering, inspections or appraisals and all that kind of stuff. So there's going to be costs associated with that. We've just got 2% kind of baked in there as a placeholder. So total price is now calculated 14.5 million or 121,000 per room. So that's the initial deal data that we've put in there. Next, we're going to move and we're going to look at the historical data, right? So you can change the years, you can put in whatever, 2019, 2022, maybe we're looking at this in the future, maybe you're putting in 2030, I don't know. But you're going to put in your occupancy, right, for each year, and you're going to put in your ADR, which is your average daily rate. And just so you know, the calculation for occupancy is rooms sold for a period divided by rooms available. It could be for a day, it could be for a month or a year. In this case, we've got it for a year. Then ADR is your average daily rate. And the calculation for that is your room revenue divided by rooms sold, right? So you're putting in your ADR, and all these numbers should be given to you from the broker or from the seller, and you should be able to go in and plug them in. The RevPAR is calculated. Revenue per available room is what RevPAR stands for. And the calculation there is room revenue divided by rooms available. That's how you get to your RevPAR, right? So your room revenue is automatically plugged in here, automatically calculated. If the hotel has food and beverage, you would put that number in. If it has some miscellaneous revenue, you'd put that number in. Miscellaneous might be cleaning fees, pet fees, resort fee, parking, all that kind of stuff is miscellaneous. The next, it gives you your total revenue. And then you're going to plug in GOP. So GOP is your gross operating profit. And it's all of your revenue minus all your operating expenses. It's how you get to your gross operating profit. So it's going to be subtracting out rooms expenses, food and beverage expenses, undistributed expenses, utilities, management fees, franchise fees, all of those things. So you'll plug that in. Last but not least, certainly not least, is your NOI, which is your net operating income. So you're going to go to the past P&Ls and you're going to pull your net operating income. And the net operating income calculation is your gross operating profit minus your fixed expenses. So those are going to be like property taxes, insurance, maybe some leases and that kind of thing to get to your NOI. And you'll see here that it's automatically calculating your percentage of revenue in every line item here. So GOP, as an example, in 2021 for this hotel was 28.7%. Then it went to 30. Then it went to 30.8. NOI went from 23 to 24 to 26. The last thing you'll see here is it's calculating a cap rate for you. A cap rate stands for capitalization rate. So in order to calculate your cap rate, it's just your NOI divided by the total purchase price, right? So for example, if this were 10%, right, the deal would be priced at $9.5 million. And what it means is and it's just calculating how quickly it's going to take for you to get the purchase price paid back based on your net operating income, right? So you're earning your net operating income in 2021 would be earning 6.5%, is 6.5% of the purchase price. So for you as the buyer, typically the higher the cap rate, the better the deal is for you. And the seller, the inverse is true. The seller wants a lower cap rate because they're getting paid a higher multiple for their property. So, okay, now we put in historical data. We're going to move on. And I know we're going through this pretty quickly, but we're happy to dive deeper into this subject, either in a different course that we offer, or on a one-on-one consult, or anything like that. So we're going to move on to the pro forma assumption here. We've got all the historical. Now we have to decide, okay, the first thing I'm going to go do is decide year one, what am I projecting my occupancy to be? The hotel ran 80% on the trailing 12 months, and it ran 125. So I think year one, maybe I can do $130, right? And then I think I can do a little bit better on my miscellaneous revenue. I'm going to take that to 70,000. But you'll notice there's a big change here on gross operating profit. We went from 30%, 30.8% to 40%. And same with your net operating income. We went from 26 to 32%. So that's a big shift. And you might say, all right, well, why would you project that? And what you have to understand is, who was the previous owner? Who was the previous operator? As Devon mentioned, an operator can change a lot. Maybe this hotel is an extended stay property, and maybe it really needs to be running at a higher gross operating profit margin. Maybe we've benchmarked this across similar types of hotels, and we've seen that other operators and other owners are getting 32% NOI margins. So that's what we've plugged in here for year one. And on these numbers, this deal is a 10 cap, right? 10.2%. So year one looks really good, right? And then we've got to decide, okay, every year, how much are we going to inflate the deal by? So just letting sort of inflation run its course. That's sort of how we've built in a shortcut to the pro forma, if you will. So we've done our pro forma assumptions. Now we're moving on to debt assumptions. We got to decide, what's the loan amount going to be based on the LTV, or the loan to value, or LTC, some people will call it, or loan to cost. So you'll put that in there. Right now, most lenders are going to give you maybe 60, 65%, maybe 70%, depends on the deal. SBA loan, you can get a little bit higher LTV, maybe at 75%. So it's going to automatically calculate the equity needed, so how much you're going to need to bring to the table to do the deal. Then you've got to plug in the interest rate, and you can talk to loan brokers, debt brokers. They can help you understand, what kind of rates are in the market right now for the type of deals you're working on. So in this case, we put 8.25%, and then we put an amortization of 30 years, and it's calculating your total annual payment. Okay. So again, cash flow wise, if you were looking for cash flow, you'd have to subtract the annual debt service from your NOI to get your cash flow, right? So lastly, we're moving on to sale assumptions. So first, we're going to decide, okay, how long are we going to hold on to this asset? Some people hold on for 2 years, 3 years, 5 years, 10 years. We've just kind of used 5 years. This model maxes out at 5 years, actually. And then we have to decide, okay, in year 5, what's the terminal cap rate, or what are we going to sell this hotel at in year 5? Remember, we're already running at a 10.2, so we've used 8.75. Cap rates kind of ebb and flow based on interest rates and market conditions. So right now, hotels are kind of trading in anywhere between 8.5 to 9.5 cap, depending on the market and type of hotel, that kind of thing. 8.75, so we're selling for 19 million. We bought it for 14.5. Feels pretty good right here. Then there's selling expenses, right? So I've got to pay a broker. There's gonna be some expenses associated with selling the hotel. So the net sale price is 18.5, and again, we bought for 14.5. So the price per key on a sale is 158,000. We bought for 121,000. And last, but again, certainly not least, you have your IR. So it's calculating a 23.6% return. So in my mind, this deal checks out. But again, you have to kind of circle back and understand we made a pretty big jump to go from 26 to 32% NOI margins. So this is a quick review of the hotel deal screener. So hopefully you find it valuable. Again, you can pick it up, and it comes with the hotel workbook as well. So check out the link below. Pick this up. There's a set of instructions here. So in case you don't want to go back and review the video, you can look at the instructions that we created, which will explain how to use the model as well.
There we go. Okay. So Tommy just explained, high level analysis of how to analyze a hotel. So it's okay for people who want to passively invest in this, but it's really beneficial for folks who actually want to buy and they're constantly looking for deals. So that analyzer is in the workbook that I mentioned before. And Tommy also mentioned about some of the different websites that you can use, because there's not an MLS for hotels or commercial real estate. So you have to go to like LoopNet, Craigslist, or work with the hotel broker. A lot of that is in the workbook as well. So high level, the acquisition process. And a lot of this you'll be doing as an active investor, right? Selecting your investment criteria, finding your team, hotel broker, lender, finding the hotel, analyzing the hotel, submitting the offer, doing due diligence, and then transitioning from, old owner to from seller to buyer, transition to new different ownerships, right? And so we talk about that not only in the book with a further checklist, but we also, have courses and stuff on that as well. And again, how to find hotels, LoopNet, Craigslist, 10X, for those who want to write it down. So Tommy just mentioned the sponsor, or what a sponsor would do, active, putting a deal together, raising capital. We don't have enough time for raising capital, which is very crucial if needed, meaning finding the 20 to 30% down if you're looking to acquire. So we do have another session on that. But for this particular webinar, we wanted to talk more about the passive and the active, and we'll see you next time for the Raising Capital webinar, okay? So again, thank you all so much for tuning in. We definitely appreciate you. We hope that you learned a lot. Definitely stay connected on Instagram, and I'm on LinkedIn and investor.com if you're looking to invest, and then our Facebook group, Investor Academy, if you want to find Tommy Bayer. He is on he's on LinkedIn, so his name, Tommy Bayer. He's not on Instagram, but you can find him on LinkedIn. He's pretty active. Or Beat Hospitality if you want to stay connected. And he's also in the Facebook group too, so Investor Academy. So please stay connected with us. We do have some courses that you may be interested in, and some programs to really help you on your journey into hotel ownership. If you just click on the link below to schedule some time so we can do a one-on-one to really get a better understanding on what's your, where your journey and what you need help with, so that we can help you along the way. Again, we appreciate you because you stayed with us all the way to the end. Tommy and I, we're going to give you some discounts, including that free one-on-one consultation. So just click on the link below. If you don't see the link, you will get an email with the link so you can book some time. So, that way we can help you along with your journey. Someone from our success team will help you make sure that you are on the right path when it comes to hotel ownership. We appreciate you so much, and we will see you next time. Well, thank you all so much, and we will see you next time.